Assalamualaikum and hi. I greet to our lecturer, Miss Nasrin Zakaria. Today, me and my friend will explain on the current issues on Takaful and also Islamic finance. Before we go further, my name is Shafinas binti Ahmad Safian.
I'm Shahida Ahmad Zakir.
I am Nur Afifah.
My name is Naismi binti Muazmi.
And me, Kashiah binti Cik Elias Osman.
I will start with the first issues, which is on the Takaful. Earlier in the year 2020, our country has been shaken with the new viruses known as coronavirus or COVID-19. I will explain on how this virus has badly affected all the Malaysian and also what initiative has been taken by the Takaful institutions regarding this matter. Special survey has been conducted by Department of Statistics Malaysia regarding the effects of COVID-19 to the economy and also to the companies. The respondents are from large companies to small companies, which involve 4,094 companies in Malaysia. The first one is the impact on the revenue, which find out that 67.8% of them get zero revenue during Movement Control Order or MCO. Even though they do not have sales, they still need to pay for their liabilities owed to the employees and also the rental of the premise. And also, most of the respondents agreed that the main assistance needed are financial terms or subsidies and also tax reduction from the government. Many initiatives has been taken by Takaful Malaysia. For example, on 3rd of April 2020, Takaful Malaysia has donated 250,000 ringgit to COVID-19 humanitarian aid. In the article on the New Straits Times stated that according to the group CEO, Datuk Seri Muhammad Hassan Kamil, the company has fulfilling its corporate philosophy in prioritizing the community. Takaful Malaysia also believe that the initiative is helpful to purchase the personal protective equipment PPE, surgical face masks, testing kits, ventilators and also other equipment needed for COVID-19 patients. I also have the chance to glaze through the Malaysian Takaful Association official website and I see more than 5 initiatives have been taken by Takaful Malaysia in order to help the government in controlling the pandemic COVID-19. One of the initiatives that I found in the Takaful Malaysia is the COVID-19 relief program. This program gives the participant a deferment period of 3 months to pay their regular contribution for the family Takaful certificate. Even though they do not have to pay for 3 months, the Takaful protection is still continue. So, who can apply for this program? Everyone that have already registered for the contribution before the pandemic COVID-19 and are seriously affected by it are eligible to apply for this program. So when they have to apply for this, the application can be submitted from 1st of April 2020 until 31st December 2020. And once approved, it will take effect from the latest contribution due date. There are two scenarios that have been illustrated in the article. The first one is the contribution payment deferment application have been approved on 6th April. And the last contribution have been made due was on 1st April 2020. Therefore, the next contribution date is 1st of May 2020. In this scenario, the deferment period will start on May until July 2020. On the other hand, if the contribution deferment application was approved on 6th of April 2020 and also no contribution was received for April, therefore the deferment period will start on April and will end on June. And lastly, how to apply for this program? An email need to be submitted to Takaful Malaysia, which includes several documents such as doctor's letter confirming the COVID-19 infection if the applicant is infected by COVID-19 the employer's letter of salary reduction or termination letter, the letter of closure of non-essential business by business owner, and other relevant proof or document. In conclusion, we can see that Takaful Malaysia has successfully played their corporate social responsibilities in helping the Malaysian to prevent and survive during the pandemic COVID-19. That's all from me. Moving on to the next presenter. Thank you.
Okay, penetration rate refers to the development level of insurance sector in a country. Okay, the penetration rate of Takaful and economic growth carry a positive relationship. This means that when there is an increase in Takaful penetration rate, the economic growth of the country will be affected positively or it will increase. In the other hand, when there is a decrease in Takaful penetration rate, the economic growth of the country will be affected negatively. Besides, this matter is a bit concerning as the B40 households are highly vulnerable to financial shocks as they often have low levels of savings. Okay, in order to solve this issue, the government introduced a social protection program known as Tenant Protection Program in 21st November 2017. Okay, its aim is to stimulate a broader movement among the insurers and Takaful operators to offer products that meet 5 parameters, which are: first, affordable. The premiums should be set at the amount that consumers are willing and able to spend on purchasing insurance or Takaful protection. Okay, second, good value. The products should cover risks that are most important for such households. Okay, third, widely accessible. The distribution channel of tenant protection products should be inclusive of the specific circumstances such as location that are typical of the B40 population. Okay, fourth, understandable. The product's details such as its benefits, term and condition should be designed to be self-explanatory to a consumer with relatively limited understanding of insurance and Takaful. Okay, lastly, easy to purchase and claim. The entire journey of a customer from the first contact with the distribution channel to the point of claims payment need to be frictionless. Okay, as you can see in this slide, these three are the Takaful operators that involve under Tenant Protection Program. Okay, first operator is AIA Public Takaful Berhad. Okay, and its product name as AIA iStarter Plan. Okay, for the second operator, which is Prudential BSN Takaful Berhad, its product name as Lindungi. And lastly, for Takaful Ikhlas Berhad, the product's name is Agro Mabrur I. This program has been improved in budget 2021, where the B48 recipients will be given RM50 voucher to purchase tenant protection products. The government also planning to extend the stamp duty exemption period for another 5 years. This extension will be applicable to only the products issued from 1st January 2021 to 31st December 2025. Besides, EPF account holders who have the intention to purchase insurance and Takaful products will be allowed to withdraw from EPF account too. The products to be purchased must be the one that approved by EPF, such as life and critical illness coverage for themselves and their family.
Okay, I will explain about the current issue of Islamic finance. The COVID-19 have given impact to everyone and also every industry. The good news that the Islamic finance lessened the impact of COVID-19. The World Bank Group East Asia Pacific Vice President Victoria introduced Building Back Better agenda, which focus on the recovery and action needed to be taken after the pandemic. She said that there is an opportunity to collaborate with relevant stakeholders using Islamic financial tool to reduce the impact of the COVID-19 and also support the realization of 2030 Sustainable Development Goals. She stated that the Malaysia is known as a global leader in Islamic finance. So, Malaysia have to innovate and take advantage of new development and digital technology to reduce the cost and expand the outreach to more faster pace. Okay, now I will explain about the effect of COVID-19. The pressure from the pandemic give an impact to limited physical interaction, which caused the increase of adoption of digital financial service. The rapid adoption of digital will improve the efficiency of financial service used by the lower income group and their families. We should know that without financial stability, it is hard to recover from the COVID-19 pandemic. Bank Negara Malaysia Governor said that the pandemic have motivated Malaysia to prioritize the resources to reconstruct the economy and the financial system to be more sustainable. That is why Malaysia is continue to lead Green Sukuk. What is Green Sukuk? Green Sukuk is suitable for the investor that prefer investment with positive environment which mainly go through the funding activities and the technology that will support the low carbon and climate resilient society. Okay, the Sukuk reduce the impact of pandemic. The Sukuk market is more concentrated and smaller and less liquid than its conventional counterpart. The process to issue the Sukuk remains relatively complex, time-consuming, and involve higher transaction costs. The rating agency Standard & Poor's (S&P) anticipate that the volume of the issuance of Sukuk will reach 10 billion notes in 2020 against 162 billion notes seen in 2019. There have been signs that the pandemic will expand the role of the Sukuk. In June, the Islamic Development Bank (ISDB) raised 1.5 billion with its first ever sustainability Sukuk, which designed to aid the recovery of COVID-19 coronavirus pandemic in its member countries. The proceeds will be given to the society project which under the ISDB Sustainable Finance Framework, with the aim to focus on access essential service as and SME financing and employment generation. The president of ISDB called the Islamic finance industry to promote sustainability of social sukuk as alternate asset classes that have been potential to reduce the impact of COVID-19 coronavirus. On September 2020, Malaysian Minister of Finance launched 500 million Sukuk Prihatin to the financing economic stimulus measure. The proceeds of the Sukuk Prihatin will be go towards the financing economic stimulus measure as well as helping the micro industry and enterprise improve broadband coverage in schools, finance research and infection diseases.
Okay, the next issue is Islamic finance and the war against the terrorists. The terrorist attack had left some very detrimental global perceptions impact on the Muslim and Islamic financial institutions globally. As most of these attacks were carried out by some militant Islamicists, understandably there were a lot of public skepticism against the Muslim religion of Islam. Islamic finance was blemished and blamed for an intentional flow of funding to terrorists. Nevertheless, international terrorism has emerged as the most immediate threat to not only global security but the future of the world in its entirety of Muslims in particular. However, in real life, Islam stressed the importance of zakat and sadaqah to Muslims as philanthropy and charity. Islam placed a high value on compassion, wealth redistribution, social justice, and supporting and enhancing fellow humans in both philanthropy and charity. Therefore, it plays a crucial role for Muslims and their society. Muslims, particularly those who live as minority in Europe, America, and elsewhere across the globe, may feel isolated and alienated from their fellow Muslims and the rest of the world as an outcome of the West's waging war against terrorism and the quest to flush out those funding terrorism. This situation has subjected Islamic bank and banking to certain risks and greater scrutiny, and has therefore led to certain constraints in their operations. Law in Malaysia to counter the terrorism. In Malaysia, the legislation governing terrorist financing is covered under the Anti-Money Laundering and Anti-Terrorist Financing Act (MAF663), which is established in 2001 and amended in 2007 to include more emphasis on the terrorist financing aspect. The Act specifies terrorist financing as the act of providing financial support either through legitimate or illegitimate sources to terrorists or terrorist organizations to enable them to carry out terrorist acts. As a market leader in Islamic finance, Malaysia views negative public perception very seriously. In ensuring effective implementation of MAF663, the National Coordination Committee (NCC) was established by the government. The NCC is in turn entrusted to ensure that all the national efforts are aligned with other regional and international practice. That's all from me. I will pass to the next presenter.
The chairman of Bursa Malaysia, Tan Sri Abdul Wahid Omar, said that the long-term potential for Islamic finance would remain promising globally in a post-COVID-19 environment due to its principle of inclusivity and the potential to promote financial stability. There had been a little understanding about the implementation of appropriate Sharia audit framework towards an effective and efficient audit from human capital perspective, and as such, there was a need to increase talent in Sharia audit. In Malaysia, the current focus is primarily on internal Sharia audit, which has raised several debates on its independence, in which numerous challenges, including the limited availability of qualified resources, have prevented the successful implementation of external Sharia audits. There is a considerable growth potential for firms to offer Sharia auditing services to institutions outside of Malaysia as part of the country's Islamic finance auxiliary services, adding that issues on Sharia auditing standards, qualifications, and independence must be resolved for the smooth development of the Islamic finance industry. There was an issue which Malaysia's Islamic finance penetration rate has grown steadily over the years and looks on track to reach the central bank's target of 40% shares of total financing by the end of 2020, notwithstanding the disruption from the COVID-19 pandemic. The penetration rate of Islamic financing, including that of development financial institutions, as a percentage of the entire banking system loans or financing, stood at 39.9% as at June 30, according to preliminary data provided by Bank Negara in its Financial Stability Review (FSR) for the first half of 2020. More importantly, the growing acceptance of Islamic financial products and services among the population will likely be sustainable due to the strong regulatory framework in place and an expanding Islamic finance ecosystem that includes Sukuk, Takaful, and Sharia-compliant funds. Malaysia is the biggest market in Southeast Asia. Industry observers says, apart from benefiting from a low base effect, another reason for the faster growth in Islamic finance over the years is that more banks have adopted an Islamic-first strategy, meaning that the bank will always offer the Islamic product first for certain products. That's all from us. Thank you.